Today, we're breaking down Dividend Stocks Explained, how to earn passive income. If you're looking for a smart way to generate consistent income while building wealth, dividend stocks could be your answer. We'll explain what dividend stocks are, how they work, and why they're a great option for earning passive income over time. From choosing the right companies to understanding dividend yields and reinvestment strategies, we'll guide you through the process of building a portfolio that pays you regularly. Stay tuned to learn how dividend stocks can help you achieve financial freedom through passive income. Today, we will talk about Dividend Stocks Explained, how to earn passive income. So before we get started, make sure to hit that like button, also subscribe to my channel. Dividend stocks are one of the most reliable ways to generate passive income. They allow you to earn money just for owning shares in a company. But how does it work, and how can you take advantage of it? Whether you're new to investing or have some experience, this guide will simplify the concept of dividend stocks so you can start making informed decisions and build wealth over time. What are dividend stocks? Let's start with the basics. Dividend stocks are shares of companies that pay out a portion of their profits to shareholders in the form of dividends. Think of dividends as a reward that companies give to investors just for holding their stock. These payments are typically made on a quarterly basis, but some companies also pay monthly or annually. Unlike growth stocks, which rely on increasing in value over time, dividend stocks provide an additional return through regular cash payments. While growth stocks are focused on reinvesting profits back into the company to fuel expansion, dividend stocks prioritize returning profits directly to shareholders. This makes them an appealing option for investors who want to generate consistent income while still benefiting from the potential for capital appreciation. How do dividends work? When a company earns profits, it has a few options for what to do with the money. It can reinvest in its business, pay off debt, or distribute a portion of those profits to shareholders in the form of dividends. Companies that are well established and generate steady cash flows are more likely to pay dividends, as they don't need to reinvest as much of their profits to grow. Let's say you own 100 shares of a company that pays an annual dividend of $2 per share. Over the course of the year, you would receive $200 in dividend payments, typically divided into 4 quarterly payments of $50 each. It may not sound like much at first, but over time these payments can add up, especially if you own shares in multiple dividend-paying companies. One of the key advantages of dividend stocks is that they allow you to benefit from both capital gains and regular income. As the value of the stock increases, your investment grows. At the same time, you're also receiving dividend payments, which can either be taken as cash or reinvested to buy more shares. Why invest in dividend stocks? Dividend stocks offer several advantages, making them a popular choice for both new and experienced investors. One of the most compelling reasons to invest in dividend stocks is their ability to provide a reliable source of passive income. Unlike growth stocks, which can be unpredictable in terms of price appreciation, dividend stocks reward you regularly with cash payments. Additionally, dividend stocks can be a great way to hedge against market volatility. During periods of economic uncertainty, companies with a strong history of paying dividends tend to perform better because they provide consistent income even when stock prices fluctuate. This stability can make dividend stocks a safer option for risk-averse investors. Dividend-paying companies are often more financially stable than non-dividend-paying companies, which adds an extra layer of security to your investment. These companies tend to generate strong cash flow, which allows them to distribute profits to shareholders. This is especially important during market downturns when capital gains may be harder to come by. Another advantage of dividend stocks is the potential for compounding returns through dividend reinvestment. Many investors choose to reinvest their dividends using the cash payments to purchase additional shares of stock. Over time, this strategy can significantly increase the size of your investment as you're earning dividends on a growing number of shares. Dividend yield explained. When evaluating dividend stocks, one of the key metrics to look at is the dividend yield. This tells you how much income you can expect to receive from a stock relative to its price. The dividend yield is calculated by dividing the annual dividend per share by the stock's current price. A higher dividend yield indicates that the stock provides a greater return in the form of dividends. However, it's important to be cautious with stocks that have unusually high dividend yields. In some cases, a high yield can be a sign that the company is struggling and its stock price has dropped significantly. Always do your research to ensure that the company is financially sound before investing in high-yield dividend stocks. The power of dividend reinvestment. One of the most effective ways to maximize the benefits of dividend stocks is through dividend reinvestment. Instead of receiving your dividends in cash, you can choose to reinvest them by buying additional shares of the stock. This strategy allows your investment to grow over time as you're earning returns not just on your initial investment, but also on the new shares you purchase with your dividends. Many brokerage firms offer automatic dividend reinvestment plans, DRIPs. which make the process easy and hassle-free. By reinvesting dividends, you can take advantage of compounding, which can significantly boost your returns over the long term. For example, let's say you invest $10,000 in a stock with a 4% dividend yield and reinvest your dividends. Over time, the compounding effect of reinvested dividends can result in much larger returns compared to taking dividends as cash. Building a dividend stock portfolio. So, how do you build a portfolio of dividend stocks that will generate passive income? The key is to focus on quality. Look for companies with a strong track record of paying and increasing dividends. As a general rule, companies with a history of steady dividend growth are more likely to continue paying dividends in the future. You'll also want to diversify your portfolio across different sectors to reduce risk. While it's tempting to invest heavily in high-yield stocks, it's important to strike a balance between yield and stability. A well-diversified dividend portfolio might include a mix of blue-chip stocks, dividend aristocrats, and growth dividend stocks. Finally, don't forget about the importance of patience. Dividend investing is a long-term strategy, and it takes time to see significant results. The more you can reinvest your dividends and let your portfolio grow, the greater your passive income will be. Risks of dividend stocks. While dividend stocks are generally considered safer than growth stocks, they're not without risk. Companies can reduce or eliminate their dividends if they face financial difficulties. This is known as a dividend cut, and it can lead to a significant drop in the stock's price. Always research a company's financial health before investing and look for signs of stability and profitability. In addition, some sectors, such as energy and real estate, may have more volatile dividend payouts due to fluctuations in market conditions. Diversifying your portfolio can help mitigate some of these risks, but it's important to stay informed about the companies you're invested in. Dividend stocks offer a powerful way to build passive income and grow your wealth over time. By investing in companies that pay consistent dividends, you can enjoy regular cash payments while benefiting from the potential for stock price appreciation. With the right strategy, dividend investing can be a reliable path to financial freedom. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.